Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, August 19, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. I expect a lot of questions from you, especially with the markets that are losing almost 100 points today. 2 things that are explaining this decline. First of all, there continues to be a lot of worries concerning China. And we had today the inflation numbers that came out, not counting energy prices. Inflation numbers are close to the Fed's target. So some investors are saying that with this data, inflation data that is close to the Fed's target, well, the Fed has more reasons to raise interest rate to keep inflation at this level. However, the fear of China is also weighing in and making sure that maybe the Fed is not going to raise interest rate because they fear that if ever they raise interest rate, it's going to hurt U.S. companies that do business in China, especially when they convert their yuan currency into US dollars, which will be stronger if they raise interest rate. So really, it's a tough balance that the Fed is going to maintain. And this is why I think investors are definitely watching pretty closely the minutes that will be published at 2 o'clock. And in the minutes, I think they're going to see what has been the consensus. Have they said that the Chinese factor will have an effect on their decision, or will it only focus on what the U.S. economy is doing? It's going to be more data driven in terms of inflation numbers or more in terms of employment. So this is actually that thing that's actually weighing in on the markets. Now, if we take a look at the SPY situation, we see that it's a clear bearish momentum that we have. We cannot say that at those levels there are several sectors that have started a bearish cycle, because if we take a look on the daily chart, we're still testing that upward trend, and whenever we tested that, look, we actually had a rebound on the SPY. Therefore, on the fact that we broke 208 points, which is what we said on MarketGurus.tv, that will trigger the opening of some bearish ETF. Well, this is actually an opportunity for those of you who have no bearish ETF at all to start to build up your positions among those bearish ETF. Now, the risk is that we might rebound, but we might rebound until 209 points, which is where all the other moving averages are meeting. And if ever the decline continues, we have more sectors into a bearish cycle, well, we could hope that the SPY could break 206 and to reach almost 205 points on the SPY. So this is what we're expecting. So far, with the pursuit of this decline on the SPY, we think that you should not rush in to short a lot of positions, but rather go in gradually, because not a lot of sectors in the US are in a bearish cycle. On the TSX, the situation is really different, because on the TSX, though, we have a clearer bearish momentum compared to the SPY, where we have a lot of congestion there, right? A support that has been tested many times where we rebounded. On the TSX, though, we cannot say this as support, because we can consider this as a short-term bottom on July 27, but this is not a solid one because it has only been tested once. Therefore, we are actually reaching that target, 14,000. And it's important that those of you who have opened some position on the TSX, especially bearish ETFs such as HXD on the TSX, well, whenever we reach the bottom of July 27, you're going to have to take some profit on HXD. It's a stock that we still have in our analyst shares portfolio on marketgurus.tv that you can have access for free for 10 days. And on that ETF, whenever the TSX reaches that level, we're going to be able to take some profit. Now, what sectors are leading the decline? Well, energy stocks, mining stocks are leading the decline, but gold is going up. And I think this is one of the reasons why gold is going up, because investors are saying that the Fed is going to take into account more of the Chinese data, where the Chinese economy is showing signs of slowing down. So the Fed is going to keep the status quo, not raise interest rate. And if they do so, it's going to be positive for the gold sector. So let's see here the gold sector, for instance, what is it doing? We have gold that is starting a short-term bullish cycle, reversing timidly this downward trend. However, there's still this 50-day moving average. Of course, technically speaking, that's the point where we could stop, but also fundamentally speaking, we need to see what the minutes are going to be interpreted by the investors and what the Fed will actually do in September. So even if the gold sector is in a nice technical situation here, there might be some buying signals. You have to take into account that in September, there's a critical decision that will be made by the Fed, and if they raise interest rate, this bullish momentum might totally deflate. So therefore, folks, it's really a short-term trade. For instance, you have Agnico Eagle here. Look at this. The stock is, okay, a breakout. However, it has already reached its 200-day, 100-day moving average, which corresponds to this downward trend at 35. Therefore, a stock like that, I would not consider it as a credible breakout. Osisko Gold could be next on the line, higher than $16. Alamos Gold, a breakout as well. Now, Alamos Gold, the thing is that if ever during the day we could have the stock that could go higher, that will confirm the bullish momentum. But if we go below 520, for me, that is clearly a sign that this breakout was false. So definitely we need more convincing upward momentum on a stock like Alamos Gold. Goldcorp, clear breakout there. We have Goldcorp that could reach 2075. So first thing I'd advise you to do is take a look at the gold stocks that you want to buy. First, put your downward trend to see what targets do you have. Look at the moving average to give you some targets. And last but not least, what you can use, you can take a look at the stochastics here that you can use on the stocks to see if ever you have more room to go before we reach the the overbought situation on the stochastic. So for Goldcorp, for instance, that will be a buy, but for $21 as a target. New Gold is it could be next on the line, higher than 325. Actually, higher than 325 will also reverse this downward trend, which will be more convincing in terms of bullish momentum. Now, we still have weakening volume. This is something that's not so good. So this is why I like to see the stock breaking 325, 228 on a stock like New Gold. Now, so this is it, folks. Gold stocks, yes, they are active. Yes, there are some exceptions that are breaking out. However, as I said, the risk is that first, how the member or the investors are going to interpret the FOMC minutes, see if ever there's a consensus towards not raising interest rate. If we do have that, well then we could expect the bullish momentum to continue on the gold sector, because if we raise interest rate, it's negative for gold. Now, because the US dollar will go up. Now, also, you have to take into account that if you're buying some positions today on the gold sector, it's a short-term trade because it's September. The Fed will take a decision. That doesn't mean because those minutes, which are the minutes of the previous meetings, if ever they're more bullish on gold, that in September they might not surprise us. So there's still that risk factor that you have to take into account. Now, on the energy sector, really oil unstoppable in terms of its decline. Clearly now making a new low for oil and bringing the energy stocks with it. So this, we cannot consider this really as a bottom. This is why the TSX is being impacted more negatively. Now let's take a look here. I want to show you MarketGurus.tv. So look at this here on MarketGurus.tv to give you an overview of all the market situation. So on the TSX, on the board here, you see that in terms of the breakdown, new breakdowns, there are 40 stocks that are breaking down. And among those stocks in the TSX, there's first 11 in the financials and 11 in the energy sector. So those are the two sectors that are actually leading the decline. On New York, 95 bearish signals, and out of them, 22 on the energy sector. So that shows you that it's a sector that's really negative. So when you have several breakdowns like that, technically speaking, by looking at the market situation, mostly the American market situation, we could have a rebound because it has happened in the past. So therefore, what you could favor, you could favor an ETF such as ERY to benefit from the bearish momentum on the energy sector, or you can go with HED on the TSX to benefit from the bearish momentum of the energy sector on the Canadian side. Now, are there some new breakdowns in the energy sector? Yes, there are. Enerflex is one of the few breakdowns there. But Enerflex, yes, you see, that stock could be a definitely nice short opportunity towards because it's leaving its overbought situation. So it has some room to go on the downside. So yes, for a nice short. Shortcore, a little bit too late for Shortcore, too oversold. So watch for a stock. If you want to short a stock, at least see if and their stochastics are there at least towards the overbought situation. So you have some room to go on the downside. See also if you have some potential until the stock reaches the low of its downward corridor. So for instance, for Enerflex, we see that the target could be towards 1063. So there's a short-term potential on a stock like that. And those are actually two conditions that you should watch to determine if a stock is going to be a nice breakdown or not. And on MarketGurus.tv, we will publish a list of the best breakdowns if ever the decline can continue on the market. So you can make the free trial of MarketGurus.tv to have access to the full list that we will publish later today.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So welcome back here. So we have one question here from Wheezy. What is the stochastic to use to best follow the market? Well, it all depends. Usually we tend to use the 923 stochastics. So for instance, if we take a look at the SPY today, was the 933 stochastics able to give us where were the tops or where were the buying opportunities? Well, we saw here that we had a top on the stochastics. It started to go down after. Then when the SPY reversed its downward trend here, we had a stochastics that was towards this level. So we were confirming a higher bottom, which was positive. Now we overbought. So which means that at those levels on the SPY, we might actually go down again on the SPY just by looking at the stochastics. So it's not always, it doesn't always work, but it's usually the one that we use. One thing you could also use that we're making some research on it, which means that we're using it pretty often to try to find some pattern, is the RSI 14. Now, if we take a look at this here, look at the RSI 14, how it gave us a clear signal when we had a breakout here that the SPY was going to have a slight rally. So this was a clear downward trend when we connected all those stops, and here we had a clear reversal of this downward trend, and that broke out. But one thing with the RSI 14 though is that you need to connect more tops as possible. So for instance, on this one here, so you could consider this, look, we had a bottom here, a higher bottom, and a bottom there. So those are only 3 bottoms, right, that you can connect. So you cannot say that when we had this on the RSI that it was a signal that could bring the SPY higher, because what the SPY did, the SPY went lower, even if we had an RSI that was confirming a higher bottom. So this is something that you have to take into account. So for instance, here you could have said, you know what, let me connect all those stops. So for instance, if the RSI has stopped here, stopped there, and also stopped here, well, I think that at those levels, that could have triggered a rebound, but it didn't happen. So what you should consider, this is why I've considered this line here, where I've connected more tops, at least 1, 2, 3, 4, 5, and then when I had a reversal of this downward trend on the RSI 14, that actually confirmed a clear breakout on the RSI. Also, we had this that happened on the SPY. So RSI 14, stochastics 933, I think are 2 indicators that you could use to follow the market to allow you to give you the top and the bottoms, but it doesn't work all the time. So this is why you have to use sometimes one or the other, and usually it's about making some research, because sometimes in some market situation where it works best for the RSI, sometimes it doesn't. So it's not such a black and white in terms of theory. It's a lot of trial and error on those technical indicators. Now, what time of the day is best to buy a stock? Well, there's no best timing to buy a stock. Usually when the markets open around 9:30 to 9:45, it's usually a moment where we usually recommend to stay on the sideline, because that's actually where the market is looking for its direction. I would say after 9:45, 10 o'clock, we tend to have a clearer direction on the markets. That could be a timing for those of you who like to favor day trading. For instance, if I have to day trade a stock, well, I'm not going to day trade it at the opening, right? I'd like to see at least what the stock could do. Also, when Market Gurus.tv, what we do is that we usually recommend stocks as a buying point at the end of the day. So around 3:30, we like to see if a stock can at least maintain its momentum throughout the day. That gives us a clearer direction on that stock, and then we can recommend that stock as a buy or as a short. So there's no clear-cut timing, but usually after the market's open, 15 minutes, 30 minutes after the market's open, and usually at the end of the day, that gives you a clearer confirmation to see if ever the stock is a real solid breakouts or breakdowns. For instance, on the list I've shown you here on Market Gurus.tv, we might have today on the TSX 40 breakdowns, but that doesn't mean that we're going to recommend those 40 breakdowns as an analyst choice. And this is where at the end of the day, you should look at your analyst choice and see what are the best picks out of those 40 breakdowns on the TSX, out of those 41 breakdowns on NASDAQ. And actually with this, you'll be better positioned to see, okay, what are the stocks that have been able to maintain their momentum throughout the day. Now, Jack is asking me, is Nugget a buy today? Yes, Nugget will be a buy today, Jack. But as I said, the risk on Nugget is, first of all, how the investors are going to interpret the minutes, which means that if ever we have China that is weighing in the Fed's decision, well, then maybe the Fed is not going to raise interest rate, because what's happening in China makes them fearful. So they might not raise interest rate, which will be positive for gold. And also you have to see what's going to happen in September. So okay, for Nugget, I would say do not go for full position, half position or quarter of your normal positions. 380 as your exit point on Nugget. So respect your exit point on an ETF like Nugget. Today is the perfect timing to start to build up your positions on some gold stocks, or you can go with an ETF like Nugget. Now, as for the day trade of the day, it's a stock and it's an ETF to track the bearish momentum of the energy sector, which is the weakest sector on the TSX and also on the US. So it's HOD, and this is why we recommended that ETF, because it gave us several entry points though for that ETF. Look at this, one entry point here, one there, another one there, another one there. It is about to give one here if ever it could go above 17.15, 17.16. But right now we are overbought on the stochastics, so I expect a pause on that stock. But 17.15 is going to be the new entry point on a stock on an ETF like HOD. So yes, folks, we have a bearish momentum. China still worries the markets. The FOMC minutes are must have to be watched to see what the Fed thinks, or what is going to be what's going to trigger a rate hike or not in September. And overall, folks, the energy sector, a lot of breakdowns there. The mining sector, a lot of breakdowns too. However, I think that what you should do is first look at some technical indicators, because when we have several breakdowns like that, usually we tend to have a rebound. And the American markets, yes, they're negative, but we're still within that neutral formation, right? So you definitely not have to be in a shorting spree today, because in the past we had several false signals like that on the market. On the TSX, I would go with some ETF. HOD could be an example. HED on the TSX for the energy sector. Those are some key ETF. And for gold, you can build up your position, but be aware that we do not have a wave of breakouts in the gold sector. Most stocks in the gold sector are still within their sideways formation. So that said, see you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.